Base Resources is an ASX and AIM-listed mineral sands company. We developed Kenya's first ever large-scale mining project in late 2013, and it's been a very successful development, having been brought in on time, on budget, and now operating well in excess of the design criteria for the project. It's an extremely profitable operation, and we've got a team that's got a demonstrated track record of success in the development of mineral sand assets. We secured control of it in 2010 and proceeded to develop it and bring it into production at the very end of 2013. It's a significant producer of, in particular, rutile and sulfate ilmenite, but also produces a reasonable volume of zircon. And it's an extremely effective mine, running at a revenue to cash cost ratio of around 3 times at the moment. That's likely to be the way it'll continue for the foreseeable future of the mine. We're now very focused on how we continue to add value to that through mine life extension. And we're in the middle of a project at the moment to deconstrain the mine and the concentrator to enable us to maintain the current high level of production, irrespective of the grades that come towards us in the future. We recently announced our first half profit for the financial 2018 year, 70 million Australian EBITDA. So it's a very significant earnings and cash generator that's enabled us to pay down our debt that was implemented as part of the funding package for the project quite quickly. We're now down at a net debt position of 66 million US, which we'd expect to see eliminated by the end of the year and become a debt-free company. We raised $100 million late last year to fund the acquisition of the Toliara project, and that capital raise was very heavily supported by our major shareholders. We paid 75 million US for that asset, and we regard it as the best undeveloped mineral sand asset in the world. Having had the opportunity to study roughly 40 alternative projects, this is the one we just kept coming back to. Now, the Toliara project is in Madagascar. It's a very large project. It's got a resource of 850 million tonnes, and to put that in context, it's roughly 4 times the size of the resource we started at Kwale with. It's a very simple project from a processing perspective and has potential for good scale and growth over time. So we see the combination of those producing an asset that will be at the very top of the industry in revenue to cash cost. Quite similar to Kwale is our expectation, and that really is going to be the future of Base, because it's got a resource big enough for a mine life of 40 years plus, and with the sort of extension potential we see, it could be 60 years and beyond. We're operating in a market now that is really resurgent from where it was about 2 years ago, when significant oversupply in the sector had caused inventories to build up right throughout the system. It took a while for demand to catch back up to that volume and consume those inventories. We've now seen that take place over the last couple of years, and we're seeing a real recovery in prices for ilmenite, rutile and zircon. Rutile and ilmenite are just different forms of titanium dioxide, with the vast majority of titanium dioxide used in the production of pigment. Pretty much everything you see in the world with a colour has a titanium dioxide pigment in it, and as a consequence it's ubiquitous in everyday life and has quite a close tie to global GDP growth. A similar story with zircon. The vast majority of zircon is used in the ceramics industry, so again it's an urbanisation and wealth story. We tend to see prices for and demand for these products taking off later in the cycle than for other commodities, because they are more about urbanisation and wealth development than they are about industrialisation. We've recently announced our half-year result, which has shown an EBITDA of $70 million Australian, with a cash flow to match. So we're a very high cash flow business with an annualised run rate of around that $150 million a year. It's a very predictable business in that sense, and that set us up very well to pay down our debt and have ourselves in the sort of financial shape to be able to grow the business.